It's run by the whale banking system. And even though it was supposed to be peer-to-peer and we controlled the money and it was non-centralized and it was freedom, it's anything but that now. The system is at a point where they've got to make a change. And the change could be what we outlined. All right, tokenize everything. Now we got a collateral base to keep the game going. We're at the end game. I think we're very close to something's got to give. It isn't the system we have. It's going to be revamped. They're going to get more and more desperate to push something new in our faces.
Before we get started, this isn't financial advice. Know your risk tolerance, do your own due diligence, and speak to a financial advisor. All right, so today's conversation, I think, could change many viewpoints, including how you see money itself. We are on the edge of what I think is going to be a major financial shift, unlike anything we've seen in at least half a century. Bubbles are inflating everywhere. Some are starting to burst, and cracks are forming in our monetary system. My guest today has been ahead of these moves for years. Before becoming a leading voice in precious metals, David Morgan worked in aerospace engineering on projects like the B-1 bomber and the F-17, along with classified programs I don't think people still know about today. So he later applied that same analytical mindset to the world of finance, founding the Morgan Report nearly 30 years ago and guiding investors through gold, silver, and the real economy. David consults for hedge funds, high net worth investors, mining companies, and even bullion dealers. Right now, he's also seeing major warning signs for our economy and our monetary system. So David, welcome to the pod.
Aaron, it's great to be with you. Thank you.
Just want to say, this is how committed David is to his craft. Just today, as you can probably see, he had surgery for skin cancer on his forehead only hours ago, and he still made it onto the pod. So David, thank you. I really appreciate the commitment.
Well, thank you. Just a little aside, I want to stay on topic most of our discussion, but yeah, those years on the flight line, you're out there on the black pavement on a test airplane and walking between the airplane, the shop, the office, and back again. So a lot of exposure. And my number one sport after age 25 was scuba diving. I was out on the water like every chance I could get. And then the second most sport was skiing. So I had a lot of sun. And yeah, no shame. It was early stage. You scrape 100% of it out. You get a little scar. Told me earlier today I'll probably end up with a black eye. So that'd be real dedication if we did this tomorrow.
Well, hey, David, man, you're tough as nails and you're committed to the craft, and I appreciate it. I think I was mentioning my father-in-law and mother-in-law both recently had similar surgery, so it's becoming far too common these days. But anyway, I appreciate you coming on. Thank you. All right, so I want to touch on your past because I think it's super interesting. Going back to the early days, before we dive into some of these potentially massive changes coming for the global monetary system, what inspired you to go from aerospace engineering, where you were working on some pretty awesome projects, to the world of finance and specifically precious metals? What was the impetus for the career change?
Yeah, that's an excellent question. I don't think I've actually ever answered this in public before, not that I wouldn't, but in public. So what actually happened when I was about 15 or so, my dad said, well, what do you want to do with your life? You got to think about this stuff. And I always was pretty smart according to, the measurements that they make in the schooling system. And I said, I want to work in finance, maybe be a stockbroker. I want to work in, innovative things. And then my dad just blew up. He said, absolutely no way. You're not going to do that. You do that. And I went, wow. Yeah, I answered him straight from the head and the heart. That's what I want. And he blew out. I didn't expect that. We had the World Book Encyclopedia. I'm that nerdy, look at the encyclopedia when they had them. They're non-existent now, but they had what was called a career guide. It was a little booklet thing. Could read it in one weekend easily. And I went through doctor, lawyer, Indian chief, accountant, all this stuff. And I got to airline. And I read that. And, I'm 15, pushing 16. Read you work half the hours of the month. You fly around, and man, that sounds pretty freaking cool. I don't know if my dad would go for that or not. So, I don't know what I waited a week or two or three, and I said, yeah, Dad, I figured it out. Well, what is it? I want to fly for a living. Okay. So two things happened at age 16. One is I started flying. And secondly, he signed a form called the Uniform Gift to Minors Act that allowed me to trade stocks at age 16. So right from the get-go, I had like 1 foot in finance and 1 foot in aerospace, you might say. So when I got through whatever grade you are, high school and all that, I started looking at the money system, started being self-taught, started to look into it, read these little booklets and stuff that were kind of, I wouldn't call them anti-government, but they were outside the mainstream. Like there was a little pamphlet called Billions for the Bankers, and they explained how fractional reserve banking worked on. So, okay, very interesting. So my interests were in both, and I'm really grateful for the aircraft career I had. For one, the thrill, fun of it, but also the engineering part that teaches you to think logically. And you don't really find that in finance that much. A lot of economics is theory, and it's just bullcrap. In fact, there's really two major schools, and that's the Keynesian school or the Misesian school. There's others, but those are the two main. And there's flaws in both of those, but the Keynesian system is far more flawed than the Misesian system or the Austrian school, as it's referred to. And I adhere closer to that. But the logic really helps in finance because you can kind of separate the wheat from the chaff, so to speak. So the whole time I was in aircraft, I was still trading. I had a futures account, watching the stock market during the break times. One of the guys, older guys, I was a youngster back then, and he said, "Now, why don't you leave aircraft and go into finance, And I did get a degree in finance, and I did lose my job in the aircraft business, and so I made the switch then. Fascinated by the newsletter industry. Where I got a lot of my self-education. And when I learned about gold and its role in monetary affairs for thousands of years, I was pretty much hooked because that made sense to me. And when I heard some of the stalwarts back when I was quite young, that really impressed me. Howard Ruff wasn't one of the ones, but he was very well known. Jim Dines had impressed me a great deal. Jim Sinclair, of course, later in life, I got to have dinner with Jim Sinclair. Doug Casey was kind of the youngest guy in the group in the first go-around, meaning up until 1980, when gold peaked. But that's it. So I have this diverse background of both. But again, I just want to repeat, the logic in engineering is so profound because it's really the only language we speak as humans where you communicate at almost 100% level. And what I mean by that is just do a thought experiment. If I build a 747, I can build it in South Africa, I can build it in Europe, or I can build it in China or in the United States. And I'm going to get exactly the same airplane. Now that's really true communication because I know every rivet, I know every part on that airplane that's got a specific metal, a specific heat tolerance or a heat treat. I mean, all this stuff is 100% crystal clear. And we don't have that in our normal language. If I say I'm going to make a killing, what does that mean? It means I'm going to make a lot of money. Yeah. And it's undefined. I mean, I won't go down the rabbit hole too far, but just the purity of engineering when it comes to like making a product and the amount of exact communication that's required for that to take place. Most people overlook and take it for granted. But, when you're sitting there looking at one of these things and what goes into it, there's got to be, what we call in the aircraft industry, zero tolerance. There can be no mistakes to get your final product. Of course, there are, and that's why part of the business that I was in, which is the most fun, is the test business. Because even though on paper the wing is going to come off after 5,000 hours, we go test it, to make sure that the stresses in the air are same as in the wind tunnel, that type of thing.
I know you're a hard assets guy. I know you're a sound money guy, as am I. But given your attraction to precision math and exact determinations, what do you think of Bitcoin then? Because it's one big math equation.
I'm not an advocate. I mean, anyone that knows how to read a financial statement, you don't need to have a finance degree to be able to do that. But there's two that you look at. It's called an income sheet, a balance sheet. And if you do that with Bitcoin and you factor in the depreciation, which means they have to get rid of these Bitcoin miners about every 2.5 years, you will find why banks don't loan to them. And the only way they can generate cash flow to keep their businesses going is by diluting their stockholders. They're probably worse at diluting their stockholders than many penny stock miners in Vancouver. I mean, and I'm not saying right or wrong. I'm not trying to make a value judgment. I'm making a factual statement that these Bitcoin miners are diluting the crap out of their shareholders. And that's because they can't get loans at the bank, because no one is going to loan money to a business that has to depreciate their capital structure, their goods that cost X amount, and you have to write it off in 2.5, 3 years. So the true cost of mining shows that a Bitcoin mined by the top three, Marathon, Riot, and the other one, is roughly $100,000. So if it costs $100,000 and it sells for $100,000, you can tread water for a while, but you're not really making any money.
Yeah, that's a valid point. That's a valid point.
Every time it halves, they're getting half the reward. There's a better solution to gold and silver. I'm all for it. I'll vote for it. Bitcoin isn't it. Sorry to say, it's just not. There's a lot of people, you don't understand Bitcoin. Well, I would say, with my background, what I just explained, having a degree in aeronautical engineering, which is not easy to get, 85 people applied for that major. You know how many graduated? 13.
Yeah, less than 10. I hear your point. I was curious about it because I look at Bitcoin not as a currency, but as a speculative asset. And when you talk about things that you brought up earlier, like, herd mentality, capital flows, sentiment, things like that, that speaks to me, right? And one of the reasons, got into Bitcoin a while ago was I just saw the capital flows starting to form on a pretty significant level from institutions. You could see the sentiment amongst the public was pretty damn bullish. And so, I look at it as basically a speculative asset and nothing more. I don't think it's a currency so much as just another thing to speculate on. But I was curious about what you thought of it, just given your math background.
Well, two more things, because not to back up very far, but, from a philosophical perspective, you asked me what I thought of Bitcoin, I just spit that out. Look, if I'm who I say I am, and I'm free market, it's up to you. If you want to look at Bitcoin as the best thing, there's Bitcoin maxis. At one time, Max Kaiser and I were fairly close, not super buddies, but, I don't know if he'd ever have me on the show again or not. I still like him and Stacy a great deal, and, but there was, and I think he still is a Bitcoin maximalist. That's not me, for the reasons I pointed out. But I'm not against him, or even that he wants to do that if I'm free market. And it is a speculative situation. And I've seen companies go way beyond what their true value was and then, fail. Look at Rex, or there's others that we know about. Okay, if you like Bitcoin, that's fine. I don't. I would say that the blockchain certainly has merit, and I think that it is part of the financial future. And lastly, to go back on what you said, Aaron, which is very important, one thing I've learned after all these years in finance is once Wall Street gets behind it, you're almost in a no-lose situation.
Right.
So when Wall Street started pushing Bitcoin far at the very early days, I caught the early whiffs because I'm pretty good at that. I put a couple cryptos on Morgan Report as speculations, but Bitcoin I wouldn't for reasons outlined. But we put on Ethereum, which beat the crap out of Bitcoin anyway. So for my readers, it was a better choice anyhow.
Let's jump into kind of conventional monetary system here for a bit. So right now we're seeing record debt, asset bubbles are all over the place. And Trump has kind of gone full protectionist mode. At least it seems that way. And he's telling Americans, don't look at the stock market for a little while, right? Meanwhile, it's in a pretty significant correction. So to me, and I wrote about Trump back in 2016. I predicted that he would win in September. It just seemed like he had momentum. It was just a gut feel. He reminded me of everything I had read about Herbert Hoover. And valuations are similar to what we saw in the roaring 20s. Personal debt, just like in the 1920s, is very, very high. Governments are scrambling with their own balance sheets. But do you think, realistically, do you think we're in a global monetary reset right now, given, I think, kind of the disruption that's been going on in the U.S. since pretty much the Great Recession, just easy money, asset valuation skyrocketing, shifting away from the dollar with some major central banks? And if we are in kind of the early innings of a monetary reset, what does that mean for investors? What should investors do, like the North American investor?
Well, I would argue that we are in a monetary reset already. China is the prime example of a monetary reset because they use basically a CBDC type of situation. 1 out of every 5 people on the planet is Chinese. So that's that's 20%. And of that 20%, about 80% of them are in the cities. And of the cities, for all practical purposes, you can't buy or sell without, WeChat or WeSend or whatever it's called. That is a system on your phone that is a digital currency. Cashless society. So there you have maybe 20% of the population, maybe 15% of the world's population right now in that system. And so that's a given. That's a fact. You can't argue that part. Then what's the rest of the world look like? Well, Mark Carney, who's now risen to the fore again, coming to Canada, when he was heading the Bank of England, he made 3 speeches. They're all basically the same speech, one at the UN, one at Jackson, Wyoming for the Fed, and another one somewhere else, saying that the next monetary system will be a central bank digital currency that is backed by nothing. It has modern money theory to it, and that's the way it's going to be. Now, just because he outlined that's what they're going to do doesn't necessarily mean the market will adopt it, but that's the outline that he made at that time. So we are in the need to reset. And normally, if you go in the past, the reset's pretty obvious. You go to gold my metallic standard has actually worked the best, but we'll just call it a gold standard. So you go from a gold standard to a fiat, it fails, back to a gold standard, it goes to fiat, it fails, go back to gold standard. And that's a very broad brush view, but that's sort of it. And now where do you go? You go back to gold standard? Well, not necessarily, because now we have this thing called central bank digital currencies. We've got, cryptocurrencies out there. There are other competing things. There's barter clubs and other things that really don't carry a lot of weight, but they're there. Well, I'm looking at this saying, well, what will happen? And now what I've written about in the Morgan report, what could take place is the lack of collateral. The $36 trillion is a big number, and mathematically it can't be paid back. However, in the report, this is for January, I said, what if we recollateralize the debt? And we said, well, let's tokenize everything that we, the US of A, own. All the parks, all the rocks in the parks, all the minerals in the parks, all the blades of grass in the parks and the trees, and the animals, let's tokenize them. And let's not forget the lakes and the rivers. And we do that. Now you're looking at where 36 trillion looks like peanuts, because now you have an asset backing or tokenization of the real world that could be used as a collateral to back up the debt. And you could keep the game going a lot longer. My speech at the New Orleans Gold Show was the new monetary system. And so where do you go to find out the new monetary system? Well, if you look at the pyramid of power to the all-seeing eye at the top, you go up right next to the all-seeing eye, what do you get? You get the BIS, the Bank of International Settlement.
Yeah.
So I took basically my whole speech off of their website, so there was no ambiguity what David thinks or David has an opinion or David subjectively coming up. No, it was like, here's what they said, bang. Yeah. I hate to use the word dumbed it down, but, I didn't put in like all the fine print because it was useless. You want the big picture, you want it concise, clear, and you want it edified to the point where people walk out of that room going, oh shit. And I think I accomplished that at that speech. So it's clearly in the workings of the banking elites what they want. Again, I'll repeat myself, whether or not we get there or not remains to be determined, but we see what the trend is.
Now, we live in an increasingly digital economy. Everything is online, from, money to markets, everything. But at the same time, I want to believe that there's this growing shift back toward real assets like gold and silver. I'm a gold bug. I believe in hard asset investing. I believe in the safety of it. Given how digital our world is going, and the potential for things like CBDCs, and we got cryptocurrencies and so forth. What do you think the odds are that we go back to, or people start to go back to, a significant allocation in their portfolios for hard asset investing like gold and silver? Because I had Rick Rule on a while ago, and he was chatting about the typical allocation of a Western investor in gold and silver is like 1%. And to me, that seems insane. Insanely low, but it's true. And I don't, just the people I speak to in everyday life, and there's smart people, business owners and lawyers and so forth, none of them talk about gold and silver. And I guess, not to load this question too much, but what role do you see precious metals playing in our future economy?
It's a real tough one with the advent of the digital system, which they've been in. I mean, once they started issuing a Diners Club card, which quickly morphed to more advanced credit cards like Visa and MasterCard. But, the Diners Club was like the first piece of plastic that gave you credit with a machine and a number. It's hard for me because I'm biased. I could see we bypass it. In fact, going back to what Mark Carney said, that's the wish of the bankers. However, central banks are buying gold at a higher rate than they have in years. So they've got a backup plan. And this is how I see it. I call them as I see them. So this is somewhat subjective. The facts are they're buying gold hand over fist. What does that mean? Well, that you have to use some thinking, and you could agree with me or not, but I look at it as their money of last resort. So if the CBDC doesn't work, they can say, oh, wait a minute. Okay, we'll put out CBDC number 2, and it's tied to gold at a whatever. I don't think it'll ever be convertible, but we had to put so much gold into the kitty before we could issue a Euro CBDC. We had to put so much gold in the kitty before we could issue an Asian
right?
Not Chinese, but an Indonesian CBDC or whatever. So I do think gold certainly could play a role going forward. But back to your specific question, will there be enough people that wake up and put like 5% of their portfolio into gold, like in the 70s, which purportedly was the amount, and I agree probably was, but can't prove it. It'd be a 5-fold increase in the Western world for gold on the retail level. I don't see that happening. I would love to see it happen, but I don't think it will. I think there's too much distraction in the crypto world. I did 30 podcasts on my website for free, themorganreport.com. Go to the blog, type in crypto conspiracy in the search engine. And the essence of it is two things, really. One is that space basically diverted a lot of money that would have gone into hard assets into this world. The second premise is that it's been subverted and it's run by the whale banking system. And even though it was supposed to be peer-to-peer and we controlled the money and it was non-centralized and it was freedom, it's anything but that now. To me, it is that. And you can go and watch all 30. You can watch a couple. I would suggest watching 1, 2, and 3 to get a good basis for like how so many things are tied to MIT, for an example. And number 14 is Kurt Wuckert, who I consider a friend. I really like him, and he's kind of a no-nonsense guy. He is an archivist on Bitcoin. He's there from day one, and he will tell you a lot of things that are wrong with Bitcoin, very similar to what I said. And he really is a big blocker. He really thought that the forking was really a disservice to the original intent. And now that I've studied it enough to know what he means, I agree with him.
Yeah, that's very interesting. So in light of, leaving silver out for a moment, but gold is kind of the backup plan or the safety net or whatever you want to call it for these central banks. I think that's a great breakdown. But what makes it a long-term investment then for the regular Joe at home who's, accumulating a portfolio and he wants to add a certain portion of gold to his portfolio? Like, that's not a very good long-term investment thesis that it could be a backup plan in case currencies, the foremost currency that the central bankers want, doesn't work. Gold's a backup plan? Like, is that it?
You put me on a panel or something or had a conversation like we're having. Here's my answer. Well, first of all, let's define money. It's primarily a unit of account. So how many units do you have? It's a transaction mechanism. And by definition, it's supposed to be a store of value. And today's modern money is not a store of value. So gold is money in the essence that it's a store of value. And that's from a record of about 5,000 years. So what I teach people is, go about your business and put maybe 10% is what I usually say, into gold or precious metals, because I like them both. I think you should have both. And that's your savings. So if you saved in metal over the last 20 years, you'd be far better off than saving in a bank account. And the best way to save is The Richest Man in Babylon. If you read that book, you save 10%, you pay yourself first. For the last 20, 30, 40 years, what you'll find is you have maintained what that value is more or less the whole time. And what that means is you don't need a certified financial planner, because if you start the workforce at 20 and you leave at 60, in those 40 years, whatever you saved is going to buy at least as much at 40 years later than it did when you started the workforce. But if you do that in fiat, what you're going to find out is that it's going to probably take 10 times as much fiat for what that first dollar you save. So that'd be point number one. Number two, if you measure things in money and not in fiat, the stock market peaked in like the year 2000. So what that means is on a gold basis, how many ounces of gold does it take to buy the Dow Jones Industrial Average or the S&P 500? It actually peaked a long time ago. And that's one of my favorite books in the back here called The Invisible Crash, written by Jim Donitz. So just because the stock market's making new highs, you get a bigger number. But 100,000 or the number, I know it's trillion. $100 trillion. So you can have a big number, but it's pretty meaningless. So you can have a big number in the stock market, and that's all it is a big number. But in terms of gold, it's losing value, and that's what the invisible crash is all about. Also, I had like a very high-end financial planner call me, and he said, I've been at this 35 years or whatever, and he goes, I have to laugh. He goes, with all the work we've done and all the, algorithms and trading platforms and all we do, especially for our high-end clients, if I just would have put them in gold, they would have been better off. So there's a lot to it. I'm not going to be a maximalist. I'm not going to be a Bitcoin maximalist. I'm not going to be a gold maximalist at all. I think that you should be diversified. I think gold does represent maybe 10% as your savings. And the last thing I want to say about savings, I've been thinking about this lately because I'm always trying to improve. And I'm always trying to improve with my ability to communicate with the general public on why precious metals are important. And then I get feedback, and it's not always positive, and some of it's probably justified. I'm only human. But what I wanted to say now, and I haven't said in a long time, but I did put it in writing, and it's been in writing for a very long time. In the 10 rules of silver investing, I tell everyone to dollar cost average. So if you put that 10% savings or 5 or whatever you could do and just bought, we'll just make up a number, $100 every month into the precious metals, and you did that religiously, or maybe it's 1,000, maybe it's whatever it is. What you're doing is when the price goes down, you're buying more units. So if gold's at 1,000, you're buying more than when it's 2,000. You're buying half as many, but you're buying consistently, which means if you have to cash out because of a medical bill, you're sending your kid to schools, you're going to cash out pretty close to the average price at the time. Mm-hmm. But if you get all, wrapped up in, oh my God, we're running out of silver. I've never seen the market so tight. Right. You can't believe it. Oh, and by the way, the premium's only $14 on a silver maple. You better buy it now or you're going to die. Well, if you buy into that, you're going to buy at the wrong time. You're probably going to buy the wrong kind, and you're probably going to buy too much. So you got to take, again, back to the logical approach. If you were buying then because you always save 10% and you paid the big doggone premium, you didn't do it for very long. In fact, you've been buying for 10 years. It'd only be, 6 months, 7 months? I forget exactly how long that huge premium lasted. So that's my point. And again, what I like about it is if you do it in that manner, you take the emotion out of it, you've got real savings. If you do, as I repeat, have to cash out, you're going to be cashing out pretty close for what you put into it. Maybe a little better, maybe a little worse. But if you buy it when everything's exciting and it drops $10, you're going to be very happy. Whereas if you just make it, and that's what it really, I think that's its purpose. I mean, its purpose is money. I don't know if you use cash or not. I still use cash a lot because I love being a maverick and going against the system. But
nice.
When you use cash, I never think of it as, savings. It's what we used to call walking around money. It's to buy that sandwich or pay your gas or, give a homeless person $5 or whatever it is,
Yeah.
Now you have a savings account and checking account. I don't want to get too detailed, but you get my point. And that, I think, was a really good approach. But no one really talks about it very much. And for some reason, it hit my heart kind of hard. It's like, what can I do better? And so thanks for the opportunity to blurt all that out. Because if you're younger like you and you've got a long-term vision and you want to get into the next NVIDIA and you think there's a really hot cryptocurrency and you want to save for a house and all that stuff, do it. But just put your savings into the precious metals, especially if you're saving for a house, because that's hard to do for most younger people. I have 2 daughters, one's 31, one's 29. My younger daughter she and her husband just bought their first house. They save for a long time to be able to do that. I'm going on and on, but the point being,
I like it.
I'm here to try to put a collected, comprehensive, and cohesive view on what reality looks like. And you can just do simple things. You don't have to make it complicated. You don't have to get the best trading platform or learn all the stuff that half that stuff's kind of useless. I read it, but did it really help me? No, because you got to learn to, digest what you use, like the great Bruce Lee. Take a little bit of everything. You don't have to believe everything. You use what works for you, kind of come to your own formula, if you will.
Yeah, well said. It's interesting. I saw a meme online a while ago, and it was basically showing 10-ounce gold bars back in 1928 or something could buy you a nice, middle of the road home. And then they showed that 10-ounce gold bars in 2024, 2025, whatever it was, could still buy you a nice middle of the road home. So to your point, you make a good point there. Do you think millennials have a kind of a crappier deal economically than, say, your generation did? Because it sounds like you have some millennial-aged daughters. Is it harder for them to get a leg up than it was for you? Or is this kind of just recency bias and it's always taken a lot of hard work?
No, it's easier for the baby boomers. I mean, even though there was an official silver standard, silver coins circulated until I was 11 years old. So the money was pretty close to constant back. And it wasn't until the gold window was closed in 71 where internationally you couldn't cash gold anymore. You couldn't redeem those pieces of paper for gold internationally. And then I think in 1974, Americans were allowed to own gold again. The worse the inflation gets, more it jeopardizes, the newer citizenry. So if you grew up in Zimbabwe, whole inflation in Zimbabwe. I did an interview with a guy in Utah, and he had a currency board of just the Zimbabwe dollar. And at the start, I think the Zim dollar and the US dollar was equal. And then after like 3 months, it was like 5-1. And anyway, the point I'm making is it went from a 1-1 to, like, after a year, a Coke at breakfast would cost you 50 million Zims, and at dinner it was 100 million Zims in one day. Jeez. And it went to this note, by the way, $100 trillion Zim note, never circulated. By the time they were printed and sent to Zimbabwe, the currency had collapsed. So these never actually made it to circulation. It went to US dollars, green pieces of paper, and of course, precious metals. So it went from 1-1 to infinity and not used in a year and a half. Now, that won't happen in the US because the way the system is set up is much more complex when we have the debt markets. And the debt markets do some self-regulating. So people fear inflation. If the market works, it's supposed to. Interest rates get pushed up because it's like, oh, I don't trust this thing. It's depreciating. Therefore, to hold it, you've got to give me a higher interest rate. So that when I buy my Pepsi in 2 years, not have to spend any more money. So to get that, I need a 15% interest rate because you're going to depreciate the currency at 15%. So I'm at least breaking even, as an example. That's the idea.
Mm-hmm.
Of course, it doesn't really work out that way because the CPI is understated and all that. The idea is sound, that the market will self-regulate, that if inflation gets too high, interest rates can get very high. Mm-hmm. So you're not going to see that kind of deterioration in the U.S. dollar. And, there's people in my industry that I really, really respect. And I would push back on some of their statements. I won't use names, but, I'm very sick and tired of hearing about the dollar collapse. Well, I'm not, because the dollar's worth about a penny and a half of what it was when it came out in 1913. So it has collapsed. Mm-hmm. It's just that we're pretending that the penny and a half is, worth something. And it is. You put 6 of them together, you get a Starbucks coffee. The coffee used to cost a dime. And my other point is the system is at a point where they've got to make a change. And the change could be what we outlined. All right, tokenize everything. Now we got a collateral base to keep the game going. That's
right.
Another one is, if you're a foreign holder of bonds, we'll give you your money back 100 years from now. Everything that's domestic will pay off as advertised on the piece of paper we gave you. I mean, I'm just making this stuff out of my head. I'm not saying any of this is going to take place. What I am saying is that they're going to get more and more desperate to push something new in our faces. And of course, as Gerald Talente says, and many agree with him, that, when things get really bad, you go to war. And of course, where are we now? We've got the proxy war in Ukraine, of course, in the Middle East, and all the talk about Iran and everything else. So I think, as Rafi Faber calls it, we're at the end game. I think we're very close to something's got to give, and it isn't the system we have. It's going to be revamped some way, shape, or form. Exactly how, I can't tell you. We outlined during our discussion a lot of potential possibilities and wishes, but how it actually shakes out still remains to be determined.
Mm-hmm. Before I let you go, you touched on silver, but you seem to be the silver authority, at least in my world. Silver sucks. Like, over the last 10, 15 years, gold has done exceptionally well for the last 20 years. 10% compound annual growth rate. It's doing phenomenal. Silver, on the other hand, is, let's say since peaking in 2011, and let's even take the 2012 price. It hasn't really moved in 10, 15 years. Why do you think that is? As a precious metal with a lot of industrial applications and a history of being money in the past, why is it performed so poorly? And I know a lot of the silver miners globally, they're not making a ton of money right now. It's probably average about 20, maybe $22 an ounce, all in sustaining costs on average, maybe high teens.
A little higher, probably 25, but there's a lot of variables. But yeah, well, I think there's a few things. One is the psychology of money. Okay, so banks will not tell you gold is money, but JP Morgan said gold is money and everything else is credit. And if you look at what they do and not what they say, central banks have been buying gold like crazy. So they still value it as a tier 1 asset. Mm-hmm. They've said that since Basel III, which means it's the best asset you can have is money. it's equal to sacrosanct U.S. Treasury, which is a piece of paper with the promise to pay what? More U.S. Treasuries. It really is.
Yeah.
So there's that. Now, the coupling to money decoupled the crime of 1873, and this is when silver officially became a non-money, even though it continued to be in circulation in the United States and other places, was in Canada, as you know. So the tide of money worked well up until that time frame and continued on for some time thereafter. But it has to be at a ratio that's pretty much commensurate with the natural ratio. So the natural ratio from the 12th century on was about 12 to 1, and the monetary ratio is slightly higher. It's more cumbersome, it takes more to lug around. So they set it, or it was set at around 15 or 16 to 1. That's the monetary ratio. But the natural ratio is actually lower than that. Today's natural ratio is about 7 to 1. But to get to where silver could be used as money, it'd be about that ratio. So you'd have, $200 silver, whatever. I mean, another way to look at it is, back in the silver era, another day, another dollar. So the average person made about $1 a day. Mm-hmm. So if you look at what's the day's wages, I looked this up. I was really shocked. I should do it in front of you because I probably the notes. I think the average wage in the U.S. like $20, and the average workday is a little more than 8 hours. So if you take $20 times 9 hours, that's $180. Mm-hmm. Now, what people don't know, and I've actually interviewed a guy recently, a very smart guy, said, well, $1 is an ounce of silver. No, $1 is 371.25 grains of fine silver, which is about 3/4 of an ounce. Mm-hmm. So if you do the math of $180 and 3/4 of an ounce, you're looking at like $200 silver. So for silver to be used as money, it would have to be that price. But it's been shoved aside. It's been turned into nothing but an industrial metal for most people, at least in the Western Hemisphere. Now, all the Romance languages, the word money and the word silver are synonymous. So if I went to Mexico and said silver isn't money, they'd look at me like I need to go to the mental hospital, because what they'd be saying is money isn't money, or silver isn't silver. They wouldn't know what the hell I was talking about. The North Americans can be undereducated at times and just say, well, it isn't because I say so. And I'm not saying that it is. I mean, silver is money legally, but economically it is not. So legally, I could take a silver dollar into a Walmart and spend, especially like a pre-65 coin, like a quarter or a dime or a 50-cent piece. It looks the same, basically. It's legal to do so. And there's nothing breaking the law or anything. And if you did it subtly, you threw out 5 quarters, 4 were slugs, 1 was a silver quarter. Nothing illegal, but economically, what did I just do? I paid in a piece of metal that melted down is worth about 10 times its face value. It's worth about $250. So it's uneconomic to use it as money with the stamps that are on it. But legally, it still can be used as money. So anyone says, well, it's not money, doesn't know the law. And I'm not trying to make a big point out of it. You're foolish to spend it at face value. We all know that. And you can look this up. In fact, it's pretty hard to find it now, but there was a Silver Users Association that was developed a long time ago. Well, there's no really cartel against, natural gas or wheat or corn, but the Silver Users Association was a consortium that gathered to make sure that the price of silver was held at a reasonable level to keep their industries, the users of silver, at a profitable note, and make sure that the monetary aspect of silver was never really brought to the fore. I actually spoke at the Silver Institute in my early days when it was kind of getting a foothold on the internet. And I was invited twice, and I get along with the Silver Institute and quite well, actually. But it was pretty clear after my second appearance that they don't want to hear about the monetary aspects of silver. All they really want to talk about is the industrial use of silver.
Yeah, interesting. So it just seems, in comparison to gold, like it doesn't have that appreciation. I mean, it has the potential, but it doesn't have the sentiment. It doesn't have the sentiment behind it. What's going to change that? Like, it's been relatively dead money for, a decade or a little over.
I think what will change it is as, the monetary system unravels further, if it does, I think it will. But I think it's prices. I mean, what happened in the late 70s going into the 1980s peak was that gold started to accelerate at such a rate that it became unattainable. Not that you couldn't buy it, it was unattainable because it cost so much. So relative to the average wage earners, weekly wage or monthly wage, it was something they couldn't really obtain. They couldn't save that much. Silver was still affordable. So I think if we get into that crisis or panic or manic mentality, which does take place in most markets, and there's no reason to rule out the precious metals because it probably will happen, then what could and most likely would take place is that, oh man, my gold's over 4,000. Dang it, I wasn't going to buy it at 3. I wished I would have. I would have made $1,000 in the last 3 months. But silver is only up to 60. The gold-silver ratio is only at 80 or 70. I'm going to buy silver. And that's what happened at the end. Now, will that occur again? I think it will. There's no guarantee that it would. And I think that I wanted to show a graph to you. It's a friend of mine that does work in the precious metals. So what it shows is the low case for silver demand. And what you see in this is a red line that goes from left to right, basically slopes slightly down to the right. And what that means is that all mining and recycling of silver is going to be steady state to slightly decreasing over the next 25 years. And I agree with that under the current conditions. Things change. If it changes, data would change, obviously. And then what you see is starting in shows about 2022, which is about right, maybe slightly earlier, that the complete amount of silver required for supply and demand exceeds what's mined and recycled. So the only way for supply and demand to balance, which it always does, is to start to eat the above ground stockpiles. You look at the next year, and the next year it continually goes up and to the right, which means every year for the foreseeable future, we're going to be eating the above ground stockpile because we simply don't mine enough and recycle enough to meet the demand. So you've got to eat what's above ground. The only thing that's at the top there is the gray or silver bars, and those are monetary demand or investment demand. Now, this is where I disagree with Matt. Doesn't make him wrong and me right, because it's the future and neither one of us know the future. Mm-hmm. But in his assumption, he thinks that the amount of investment demand for silver for the next 25 years will be steady state. I disagree. I think as the monetary problems get worse and worse and worse, there'll be more push into the precious metals, at least from the central banks, that will slide over into silver, as we just discussed. So I would see those numbers actually increasing over time, at least for the next few years, until there's some type of a reset, a tie to gold, a tokenization of assets, a recollateralizing of the debt, a one world currency. I'll go as far as to say a mark of the beast. I mean, we don't know what the new system will look like, but we do know we're being pushed toward that. But I think it's an interesting chart to, give any silver bug some hope that, more than hope, really, pretty good outline of what to expect. And remember, this is the low case. The high case is where there's more oomph into the panic, manic, parabolic phase of the market where people really get scared and they're driven by fear, not by greed. And fear is a bigger motivator, and they're afraid that their currency is going to turn into one of these. And if they fear that, believe me, a lot of people that hate gold now will be buying it because they're going to be self-preserving what they've saved, what their labor has been exchanged for, and they're going to move it into something that they think it'll store value.
I like that. That's a very good breakdown. Lastly, I want to jump back to something. You talked about time, most valuable asset we have. Obviously, I agree tremendously, but it's funny, we get so busy in our lives, and I think you're probably a lot like myself and many other guys who who are passionate about the markets. It's hard to relax. It's hard. You mentioned that, I got to force myself to relax sometimes. When I'm in my free time, I want to learn, I want to research, but it's not you got to learn to chill. So I guess what I'm trying to say is, what do you do with your free time? You're very well read. You obviously have a very good grasp of, monetary policy, monetary assets, investing. You have a good grasp on a lot of things that are pretty complex issues. I would imagine you spend a lot of your time working, reading, researching, and so forth. But how do you find time to relax? Given
I like movies, particularly sci-fi, and I watch movies, a lot of documentaries too. Mm-hmm. I just watched the latest Zeitgeist last Saturday, and I forget Peter's last name, but he did some pretty good points to think about in the Zeitgeist movies. This one primarily focused on the money question. So movies is one. And another is kayaking. I still kayak.
Nice.
So I love getting out, especially on a river. Lakes are fine and very relaxing, but something about a river, especially the ones we have around here where you see so much wildlife, about every third trip, you see some of these big cranes that are just, it's so magnificent to watch. I mean, when I used to dance, I used to do tango.
No kidding.
Yeah.
Right on.
Yeah, no, it's, I can't say enough. Anyone that's thinking about taking tango, I would definitely say do it. The thing about tango is it's really no set steps. I mean, there are things you learn and you can, they call it the basic 8. And, I thought it was like learning the cha-cha or the rumba or something. I'm not really a dancer, but those are just moves to keep in your repertoire, because really the tango is about a heart-to-heart connection with your partner. And it's basically freestyle.
Yeah.
You're just moving your woman around, I should say moving, but connecting with your woman around the floor the whole time. And
nice.
It's open season. You can get as simple as you want or as complicated as you want.
Hey, David, man, this was a great, all-encompassing conversation. Before I let you go, where can our viewers find you online? Tell us more about the Morgan Report and what you have to offer.
Sure. The main landing site is themorganreport.com. We have a free newsletter and we have a paid service. You can look at the subscribe button if you're interested in the paid service. And then lastly, I'm working on a documentary and the filming's complete. We're editing it now. Hope to have it out probably in about 3 months or so. So hopefully in the summer. Go to silversunrise.tv. Watch the trailer with G. Edward Griffin, some of the other notables in the monetary sphere. And it's really about the spiritual side of money, which we could take up after you watch the documentary, because I attack the money problem from a different aspect of just not like having enough or being financially independent. I look at it as a control mechanism and the amount of fear that it puts into people. Because really even the rich are fearful about money. They're fearful that someone's going to steal it from them, take it from them, shake it down for it.
Yeah,
and then
fearful of losing
fearful they'll never have enough. And there's just too much crap surrounding the money question for us not to break free of that. And that's going to take a shift in consciousness and a different way of interacting with each other. So that's what I strive to do in this film.
Well said. And when will that be out?
I don't have an exact date, but we're in March, so April, May, June, probably by July 1st.
Okay, nice. Well, I'm definitely going to watch that. And we'll include links in the description to the trailer, to the Morgan Report. David, it's been an absolute pleasure, man. Thanks again for getting on the pod today. I know you had a busy morning, but man, dude, I envy your work ethic. It's an example. So I appreciate it. I really enjoyed this conversation, and thank you for joining me today.
Yeah, my pleasure. Thank you.